Managerial accounting. This is part one. This is an introduction. The first thing you need to understand about managerial accounting is the terminology. So, first of all, managerial accounting, I love this class because what you're really doing is looking at what ifs. And it gives you the tools to do that when you're running your business. So, again, it's a great way for you to understand where your business is and where it could go. Like, for instance, are you going to double business or is your business going to be cut in half? You can use these tools to help you understand what you need to do if either one of those things happen. Financial accounting is the first step. You have to have taken that class because you need to understand accounting. Now, the important thing to do is you do need to practice, and that's why you have the homework, that's why you have the concept reviews, and that's why you have the SMART book, which I think is an excellent program to help you go over what has to be done. If you need help, please email me. I've been doing this for a long time, and I really understand accounting. I teach intermediate as well as advanced, and managerial and financial, so I really know this topic, and I worked in the accounting field for years. So managerial accounting is more of a big picture. And again, what I've seen in my career, and I did consulting for businesses, is sometimes the worst thing that can happen is if you're successful right from the start, because you have a tendency to ignore the detail. So now let's look at the difference between financial accounting, which is what we've already covered when you took that class. That focuses primarily for external users. It mainly for people that want to invest or lending. They have to follow generally accepted accounting principles. The primary product is financial reports, and it's based on historical data. And the information must be reliable and objective, and it focuses on the company as a whole. And financials are provided actually, they're monthly, quarterly, and annual. The big report's the annual report. And this is what CPAs come in and verify, is the information that's provided on those reports. Then we have managerial accounting. Managerial accounting, what this class is all about, it focuses on internal users, so you don't have the same requirements. It is to help managers direct and control the business. The primary focus is the future. And management really comes up with what they need for reports. They tend to focus on segments of the business, and they're based on the needs of management, and they don't have to comply with GAAP or the international standard, and there are no independent audits. Now, the next thing we're going to go over are the accounting terms. And what we're really looking at here is, in order for you to do a lot of the projection we talk about, is you have to understand how we categorize costs primarily in a manufacturing environment. And here are some of our categories. We have what we call direct costs, indirect, overhead. We have prime costs, conversion costs, product costs, period costs. And we also have one that I don't have listed here, we talk about later, are cost drivers. Now, direct and indirect costs. Direct costs we can trace directly to the product. A good example is if you make hats, the material would be a direct cost. We'd know how much we use for every hat. So again, if you were making a dress, it'd be the fabric, the thread, the buttons would be direct costs. Indirect costs are costs that are related to the production of a product, but they cannot be specifically traced to a specific unit. Examples would be the plant and equipment depreciation, a supervisor's salary, and utilities would all be considered indirect. So now let's take a look at classifications here. So in this example, the first we have is depreciation on a classroom building, and what we're trying to figure out here is the cost objective is in an individual class. So depreciation on classroom building definitely would be indirect because that would apply to all the classes. Monthly internet, all the classes. Instructor manuals for students, you could individually determine how much of those would go based on the number of students you have. The cost driver would be number of students in that example. Building utilities would be indirect. Depreciation would be indirect. Instructors' wages per class would be direct. Classroom cleaning fees would be indirect, and snacks for the class could be direct because you'd know how many you would use. Now let's move on to assigning costs. When we assign direct and indirect costs, direct costs we can go to a specific job. Indirect costs are normally allocated based on some cost driver like labor or hours. Now, direct materials are the expenditures for direct materials that are separately and readily traced. And then we have direct labor are the wages and salaries for direct labor that are cost effectively traced through the manufacturing process. Factory overhead. Now this is always the tough one, is the overhead, because overhead is always allocated and it's estimated. So because we have to apply it throughout the year, we don't wait until we have all the costs. What we do is estimate the cost, estimate the usage, and then apply it. So again, factory overhead consists of all factory-related costs associated with manufacturing that cannot be directly identified to the finished goods. So you'd have indirect labor, indirect materials, and indirect other costs. Now, when we talk about prime and conversion costs, direct materials and direct labor are considered prime costs. Now, we take our prime materials and then we convert them, and we convert them with labor and factory overhead. Now, manufacturing costs are always made up of three elements. When we make something, we have direct labor, direct material, and factory overhead. These product costs are always treated as an asset until they are allocated, i.e. by selling the product. Period costs are non-productive costs linked to a time period. They're always expensed. Examples would be the cost of selling the goods and also general administrative, such as the accounting department and HR. Now, costs for external reporting must follow GAAP. Product costs incurred by manufacturers to produce their products or by merchandise to purchase their products are treated as inventory, i.e. a current asset until sold. A product cost is always expensed in the period. Now, here is an example. We'll go through another little example that I really like, is advertising expense would be a period cost and it would go under selling expense. Depreciation expense office equipment would also be a period cost on the income statement, and it would be general administrative expenses. Depreciation expense selling equipment would also be a period cost, and it would go under selling. Now, anything that says factory is going to be a product cost, and it's going to be part, since it's depreciation, it would be part of factory overhead. Purchasing of direct materials is going to be a product cost, and that is direct materials. Maintenance is going to be a product cost, but that's going to be part of overhead. Factory utilities is going to be a product cost. That's going to be part of factory overhead. Direct labor is going to be a product cost, but it's going to be a direct labor. Now then we have we have office indirect labor, which is going to be part of overhead. And now we're going to get into our period costs, which would be salaries, rent expense, and those would both be general administrative expenses. And rent expense would be a period cost. It would be a selling expense. And then rent for the factory is a product cost, and that would be part of overhead. And last, we have our sales salaries, which is a period cost, and that would be part of selling expense. This ends part 1, chapter 1.